Yes, we're open to the public. Right. First item, apologies for absence. Don't think there are any, are there? No apologies for absence. Then I have to remind you, of course, of disclosable pecuniary interests. Members are reminded they must declare their disclosable pecuniary interests and other registrable or non-registrable interests in any matter being considered at the meeting as set out in Appendix B of the Members' Code of Conduct. And they should consider if they should leave the room prior to the item being considered. Right. And we have no disclosable pecuniary interests notified, I take it. Good. Minutes of the previous meeting held on the 23rd of November are before you in your papers. Can we agree them as a correct record before we ask for any matters arising? All agrees a correct record? Thank you. Anybody got any matters arising? Aren't covered elsewhere in the agenda? No?
Right, I've just got one question on that. Were the year-end 22 and 23 external audits, have they been closed?
Some details of that later, haven't we?
Is that, sorry, does that come up later?
Well, then it will be covered in the audit finance report, which we put there. But thank you.
Okay, so everybody happy with the minutes? We now move on to public questions. Are there any? Members' questions, are there any?
No.
Item 6 then, second line assurance treasury strategy 24-25. James, I believe you're going to introduce this.
Thank you, Chair. So I'll give a very brief introduction to this. So this is the Treasury strategy for the 24-25 financial year. Every year we produce the Treasury strategy in line with best practice. So this Treasury strategy gets considered by Cabinet, by Audit Committee, and then is signed off by full Council each year. The strategy itself doesn't change significantly from one year to the next. It takes into account the work that's being done through the capital strategy, which then leads into a capital programme. It looks at our strategy around borrowing and around investment, and identifies the way in which we will manage the council's cash and cash flow over the following 12 months. As always, within the Treasury strategy, we try to set out a full position, which will be in excess in a sense of need, so that we do have flexibility within that. So, for example, should the capital programme be delivered at or ahead of plan, and there would be a need to borrow, that would be incorporated. If there was a change in our overall cash position, because, for example, cash that we're currently held around community infrastructure levy or section 106 or reserves or capital receipts was used, and therefore we had to undertake borrowing in the short or long term, all of that provision is built in. So it's not so much a kind of a description of what will happen. It's more an enabler to keep the authority running smoothly over the next 12 months, taking into account all that we know. Within that, therefore, there are a number of delegations that are built in, and the majority of those delegations fall to myself as the Section 151 officer to exercise the necessary action within the framework that's agreed by full council. So ultimately, full council agreed. Ultimately, the role for Audit Committee is to review and consider if there are any issues or questions they would like to ask around that, so that confidence can be given to full council around the approval of this particular strategy. I'll stop there. Thank you, Chair.
Any questions? Yes, Jim, come in.
I've got a question. When I was looking through it, it mentions an organisation called the Link Group as advisors. Who are they and what's their role?
Okay, so for you, Chair, so yes, we have That's the current name of the organisation. The name has changed over a period of time. We've used them as our advisors. Lots of local authorities use Link in the past. They have been named. Capita has taken them over and things like that. So it's part of a wider organisation. So Link Asset Services provide us with treasury advice. They provide a lot of the background information around where the economy is and where that any projections around that, and ultimately in any treasury decisions that we undertake as a local authority, we seek their advice and consideration before we make any decisions. So they're a well-known organisation used by a lot of local authorities.
But just in an advisory capacity, not in a provision of investments and things like that. There's no chance of them having a conflict of interest.
No. We don't invest with them. They are purely an advisory organisation. So they will produce advice around that. They will provide us advice on a daily basis around any organisations perhaps that are on our lenders list that they've got some intel around, where they say this may not be an organisation you want to lend with, or they'll drop it down in relation to their the level of assurance they would give around that, as well as providing sort of regular more long-term kind of standard information and data analysis that we use then in managing our overall position.
Okay, thank you.
We don't change our lenders on a day-to-day basis, do we? Sort of once they're set up, we review them sort of monthly or something like that.
Yeah, so we have an agreed lenders list. So that's the organisations that we are willing to invest our cash with. That list doesn't change significantly. You're absolutely correct. What happens is that if there is any advice that's provided, any questions that we want to ask, this could be issues raised by members. We would go back and ask for that to be investigated. We use Link to do that, and on the back of that, then a schedule is produced, which is signed by myself, and that then gets populated around the officers that can make those investments, so that inadvertently we don't invest in an organisation which we've decided as an organisation we don't want to. But you're absolutely right, Chair. Generally, from one day to the next, 1 week to the next, the organisations that we invest with, the list doesn't change significantly.
Thank you. Yes, Nigel next, and then Simon.
I don't know whether this is the correct section, because I read an awful lot about the state that the council's in, but it's about general reserves and the amount of that we will owe, or rather we need to save next year. Last year we propped up right at the beginning the general reserves by 20 million, and then by the end of the year we'd spent it all. This year we've done a similar thing, and the figures are a little bit grey, but I suspect it's 31 million. And I'm starting to feel a little anxious about that, because, and I'll change the phrase a little bit, are we now borrowing off Peter to pay Paul? In the sense that should it be audit looking at this, or should it be scrutiny? Because should it all go horribly wrong, it's going to come back on audit and say, well, what have you been doing the last year or two when you've got this, you're putting money in when you're just taking it straight back out again?
Yeah. Okay, so through you, Chair, May. So there is a link between the level of reserves that we hold and the level of cash that we hold, in the same way that there is a link between the level of capital receipts, Section 106, debtors and creditors. All of that is cash within the system. However, there are examples around the country where organisations have gone into effectively issued a Section 114, but their treasury position is unchanged. So what we're talking about here, because often it's talked about kind of bankruptcy, and that's the wrong kind of term, because they're not illiquid. The cash that's held in the organisation is usually quite robust, and the treasury strategy around that may be robust. The problem is that the amount of money coming in for services and accounted for within a year is less than the amount of money coming in is less than the amount of money going out from an accounting point of view, and therefore that's what drives those issues. So from our point of view, the bigger issue, you will have seen that the amount of cash that this local authority is holding has reduced over a period of time. Now, part of that equation is that we have we have about £380 million, might be less than that now, of long-term borrowing. So that's borrowing that's been undertaken on the back of capital expenditure in the past, so linked to assets. That borrowing, if you think about it really simply, let's say we borrowed £380 million, that would be sat there in the bank. We wouldn't be spending that, so you'd be investing that in various places while that happens. Over a period of time, that elements of that 380 million will mature. So we never borrow and have everything maturing at the same time, so we spread it over a period of time. So over the last few years, some of those loans taken out in the 90s and early 2000s have started to mature. And as they've matured, we've paid that off. Now, the standard approach to that would be, therefore, we need to take out more borrowing to keep the cash balances at the level, but we haven't done that because our cash balances have been so high. We were over £150 million in cash a while back, and that was after we'd invested in the Shrewsbury shopping centres, which were over 50 million. So our levels of cash were incredibly high, and from Link, our advisors, they were advising that we shouldn't be taking out any borrowing, because any borrowing that we needed to undertake, on the basis of an individual plan where we say that requires some borrowing, there's no point going out and actually physically borrowing. You can borrow internally because you've got the cash there. You can effectively loan it to yourself from a cash point of view. That's not a Peter to pay Paul. That's purely a correct prudential borrowing approach. So over time, as we have started to spend capital receipts, as we've started to spend reserves, as we have paid off those long-term loans that were there, our cash balances have reduced to the point where now we're looking at more like about £50 million. That's where our cash balances are, which is a quite reasonable amount of cash to be held. However, right now, February and March, that's the example, if people who pay their council tax by direct debit don't pay in February and March. So the level of cash balances that would normally come in over the February-March period is going to be lower. So if we're sitting on 100 million, it will be an issue. If you're sitting on 50 million, you then start to say, well, will our cash balances be impacted? So from that point of view, you then may undertake some very short-term borrowing from other institutions, perhaps for a few days, for a few weeks, because on the 20th of the month, the payroll bill goes out, and that's a big figure that comes out. So all of this is what we manage within the overall position. My point in saying all of this is that the management of the cash is not entirely separate, but is considerably separate to the accounting position in terms of the services that we provide. So, as a very simple example, if you had a service that was going to cost £5,000 to deliver, and you invoice another organisation for £5,000, from an accounting point of view, your invoice would be raised and your £5,000 would be there, and then you'd go out and spend. Now, if you invoice, they didn't actually pay that cash to you, you're £5,000 out if you've then spent that. But from an accounting point of view, you're absolutely fine. And the contrary can happen as well, which is what we're looking at here, where the accounting position is more difficult, but the cash position is fine from that point of view. And I say our advisors are looking at that cash position constantly. They look at our balances, they look at our working capital. So they are looking at the levels of debtors, creditors, money going in and out, our cash balances, all of those other things, say reserves, Section 106, bill monies, etc. They're looking at that position constantly. Government grants going in, payments going out, council tax and business rates, and they are assessing that from our point of view. Are we in a liquid state? And we are absolutely fine from that point of view.
Nigel, if you feel you've been blinded with science, you're not alone. I hope you understood all that, because I find it quite difficult to get my mind right.
Yeah, I understood that. It does seem a little bit bizarre that we cut down our debt, and then we can't necessarily then put that debt back up because we can't borrow to finance revenue.
Yeah, so just on the back of it, yes, you're right. We can't just go and borrow and pay for revenue costs. But from our cash point of view, where we would be is if we needed to borrow to I'm trying to give a non-political example. So just imagine an asset that we should go and borrow against. From a potential borrowing point of view, we would have an asset that we would then borrow against, and that money would come into the account. The point is that if you're sitting on £100 million worth of cash, you don't need to borrow at that point. You may borrow in 5 years' time against that exact asset for those exact purposes, but you're doing it because your cash balances now have reached a point. That in itself then has a revenue implication. If you borrow internally, so you say, I need that £20 million for that asset, so I'm going to reduce our balances down from 100 million to 20 million to 80 million effectively, you're still paying interest on that internal borrowing, but the interest is effectively coming to yourself, so it becomes a transaction. So it's beneficial in lots of ways. So you can and will borrow in the future from a cash flow point of view, but you'll always borrow against an asset on that basis.
Thank you, James. I'm going to Simon, and then
do go, because I'm sure this is to do with
just
the.
following on. Quick follow on, James, please, if you would. So you gave us an example, probably perhaps it was an unfortunate one. You gave us an example of no cash coming in for council tax in February and March, which even I know that happens. So that's entirely predictable, is my point. So that shouldn't be having an impact, should it? So there are other pressures as well as that. So perhaps it was an unfortunate example. I don't know.
No, I gave that example specifically, sorry, future. I gave that example specifically because it's a fact. And you're absolutely right. We do know this every year. We know that February and March will always be lower council tax. What we don't know, however, is the level of Section 31 grant that will come in. What we don't know is, are there going to be a huge amount of capital payments that go out before the end of the year? What we don't know is the financial year ends for a number of other organisations that we work to, which may or may not be chasing payments in ways that they wouldn't do out throughout the rest of the year. It's those sorts of things. So what I'm saying is that we can very clearly, and the Treasury team are asking constantly for and have a profile of expenditure over the year. So RSG, the Revenue Support Grant, is only £7 million now. So the cash it's paid every month. The cash implication of that is very low. Back in 2013, that was £70 million. So that was a lot more money that would be coming in. And so what you're doing is, from the Treasury point of view, you are constantly looking to say, based on the understanding of today, have I got enough cash to pay the things out that I need, or do I have more cash and therefore I need to invest? So, and whichever of those positions you're in, you're then looking at, well, what will be the decision tomorrow and Monday and Tuesday and Wednesday and next week and the week after and the week after, so that you say, often, for example, we will have investments that mature on the 20th of the month, because that's when the payroll goes in. So you invested some money and you make sure it comes back on the 20th, so you've got the cash to pay that out. You will, as part of that, take into account that the council tax take will be much lower over those months. So therefore, you may need to do, you need to do more. So the point I was making was, we know that our cash balances were lower, and then over this period, we know they're going to be lower still. That's all known and managed. That doesn't mean that we would then go and borrow £10 million in December because we were worried about February, March. That's saying if over that period we end up with more costs than expenditure than income in that period, we may need to undertake some short-term borrowing, but that would be perfectly acceptable within the Treasury strategy, because that's we've felt that would, or we've not felt, we've decided that that is the most financially advantageous way to do it. So ultimately, if you short-term borrow, it can be for a few days. If you undertake a loan, you're tied in at that interest rate for the next X number of years. You don't really want to do that just from managing that cash flow around a known event like the council tax.
Yeah, thank you.
Okay, yes, yeah, I'm very happy, Rosemary, with that.
Yeah, if I may, Chair, and it's really basically following on from the last couple of queries. James, can you confirm that we are not borrowing either working capital, i.e. overdraft, or the short-term liquidity that you've just described, or long-term loans to fund the revenue, money in, money out? That's one question.
Okay, so we're not undertaking any long-term borrowing. However, through the year, there is always that potential that we will. So let's say, as an example, we've got money maturing on the 20th of, let's say it's the 20th of June to pay the payroll. And what we then find is that on the 18th, somebody informs us that there is a big payment, unexpected payment going out on the 19th. We may not have the cash. So what we then do is say, can we borrow the cash for maybe a day just to keep that liquidity at the level?
But basically, sorry to interrupt. So basically, what you're saying is you do go to the markets. I assume these are lines that we have with banks to borrow short term, but it's only liquidity borrowing.
Absolutely.
It's sort of like overnight or so forth. And there is no, I mean, I think it's really important, this is that there is no long-term borrowing to support revenue deficits.
Absolutely correct.
Okay, thank. That's it. While I think of the, the interest for the existing capital debt,
yeah,
which I think is about 286 million, which is already drawn. Does that go through the revenue account?
So for you, Chair, yes. So we borrow at fixed rates so that we have certainty, and that borrowing, the revenue, the cost of the interest associated with that is paid, and that shows within the revenue account as a cost.
So basically, council tax and everything else, but let's just say the council tax would be paying for the interest on the capital borrowing.
Yeah, all resources.
The last point, and we're moving away, is are we still investing in local authorities? I say this at every meeting because I mean, one has to be careful at reading the press, but it would appear, and I think our own experience in Shropshire supports this, is that local authorities have financial issues. And only really blow up when the auditors actually work out that somebody's been borrowing to invest in properties or so forth. And I am really uncomfortable that we are investing in local authorities. And can we not?
So to you, Chair. The cash position of a local authority can be very different to the kind of the accounting position. I think where I would go with this is that our advisors are constantly looking across the piece and getting information around the investability or the willing, the acceptability of borrowing or investment from all the institutions that we work with. So if they have a hint that that there is a particular institution out there, whether it be a local authority or whatever, that there may be some issues in terms of the return of our capital and interest, then they would flag that, and we would build that into our borrowing list. So going back to our basic principle, security, liquidity and yield, the most important one is not return on your money, it's return of your money. That's the starting point. So we are most concerned about that, and on that basis, we will take the advice of our advisors. So it says, sorry, just one final point, which I think will pick up what you're asking. However, there have been examples where we have, of our own volition, said we are not going to invest in that particular organisation because although on the face of it, it looks fine, although the advice that we've got, we just don't want to take the risk. And an example of that would be the Icelandic banks, where we didn't, as a local authority in Shropshire, but some of the districts did. And the advice was, let's say, however, we decided that there were risks associated with that, and we didn't take that. So we do take that. So in terms of your point, we do take that into account. However, there are the security around local authorities. Ultimately, this is why they always say Section 114 is a local authority going bankrupt in and put it in speech marks. It's because, as I've said before, local authorities can't go bust. So from that point of view, our money would have to be returned.
Yeah, I mean, there'd be a timing issue on that, and I just don't want to be sitting on an audit committee when the press and the public say, well, why were you lending to Thurrock or somewhere, Birmingham? So I'd like comfort that it's lending to investing in is short term. And with regard to the advisors, winding back to 2008, or I'm old enough to recall that, there is always the black swan, and the advisors didn't spot that black swan at the time. So I accept that they are professional people and accept what you have said, but I think the rules are very clear when it comes to the financial situation of local authorities. So to wrap that up, can you confirm that the exposure we have to local authorities is, say, no more than 3 months?
So within the strategy, it will limit that to 12 months. But that said, we from memory, we very rarely invest with local authorities over that sort of period. But I'm quite happy to take that back and to advise that there is reluctance from the audit committee around any investments within local authorities, or there is more due diligence required around that.
But that was only my view, and for the secretary's point of view, I would like some of that limited. But maybe the chair would comment. I wouldn't be so pretentious to say that you should take action on just my view.
Well, I think James has taken note of your view, and consider whether or not it will just affect us in the way that.
Yeah, I mean, just to clarify, Chair, I think what I'm trying to say is I will take the points that have been raised back. I won't take that as an instruction. I will take it as a quite reasonable point that's been raised within the audit committee. I didn't mean that everybody was endorsing it, but within the audit committee, an issue has been raised, which is quite legitimate and acceptable. And on the back of that, we will review and consider, and I can bring you back a response on the back.
I think we should remember that other authorities invest in exactly the same way as we are doing. We're not an organisation which is running a unique system of investment.
I've never been a big fan of following the herd there, Chair. So
no, but
I've seen it go wrong so often as well. So anyway, moving on.
Right. So you will see the recommendations. That this strategy is one of the best looked at policies of the council, since it goes to committee, cabinet and council. Not many policies do that. Though, shall we receive and approve the Treasury strategy so far as this committee is concerned? And there will be another opportunity to look at it at council next week, I presume. Okay, to receive and approve, agreed? Thank you. Right, item 7, draft audit committee work plan and future. I think this is you, Barry, isn't it?
Thanks, Chair. Yes, it's important that audit committee members have an agreed plan of work for the year ahead and receive appropriate learning and development to deliver their responsibilities effectively. This report provides a proposed audit committee work plan for 24-25. By identifying the key topics to be considered by the audit committee meetings, and receiving appropriate learning and development sessions in respect of the roles within the audit committee, members can undertake their duties more effectively and deliver them to a high standard. The work plan at Appendix A demonstrates how the reports of the audit committee contribute to the delivery of the committee's terms of reference and the assurances that they provide. There's a range of knowledge and experience that the audit committee members can bring to the committee, which will enable them to perform effectively. No one committee member is expected to be an expert in all areas. There are, however, some core areas of knowledge which committee members need to acquire in addition to the need for regular briefings and training. The details of the training topics covered during the 2023-24 year can be found in paragraph 7.5. It's proposed that training is again provided over 3 half-day sessions over the next 12 months. So the 13th of June session has been rearranged to the 11th of June, and that was updated before the report was made available to yourselves. Session on the 12th of September 2024, and then final session on the 23rd of January 25. So Appendix B of the report identifies the training topics for audit committee members to consider. The topics are considered as core areas of knowledge that audit committee members should have. Members should seek to acquire plus specialisms that can add value to the committee, and members may also want to hear from key officers of the council throughout the year where we've got change in activities or changes in risk profile, or where emerging risks are present, and they can request this as part of their ongoing training. So I'll stop there, Chair.
Yes, the work plan follows the same general schedule year by year by year, because we have to cover the same ground again each year. It's there before you. Comments, anybody? Are you all happy with the provisions that are set out before you? Right, shall we accept the work plan and approve it for what we are going to do in the coming financial year? Agreed? Thank you. Item 8, third line assurance, internal audit performance report and revised annual audit plan. A lot to be considered here, but Barry, would you like to introduce it?
Yes, thank you, Chair. I'll just give a brief synopsis. So this report provides members with an update of work undertaken by the internal audit team in the 3 months since the November audit committee. 71% of the revised plan has been completed, which is in line with previous delivery records. The team are on track to deliver a minimum of 90% of the revised annual plan by year end. 2023 has been a challenging year for the internal audit team. We have seen some staff turnover, which has reduced the resources available for planned internal audit work, as reported in the September and November 23 audit committee meetings. Recruitment campaigns undertaken during 2023 were unsuccessful. It is important to note, however, that whilst the reduction in the available resources has had an impact in the year, core audit work has been undertaken or is planned in the final quarter to enable an overall opinion on the council's internal control environment to be formed and reported accordingly. Recognising the need for immediate action in relation to the vacancies within the internal audit team, a further recruitment drive is currently underway to increase capacity for the 24-25 financial year. An updated approach to the structure within internal audit, updating job roles has been implemented in the hope of appealing to more external candidates to garner that interest. It envisages that the current recruitment campaign will be completed by the end of March 24. So on to the actual planned work. In total, 12 final reports have been issued in the period from the 21st of October to the 19th of January. All are listed with their assurance rating, broken down by service area in paragraph 8.9. The year-to-date position is shown at Appendix A, Table 2. 7 draft reports are currently with management awaiting responses, and they'll be included within the next performance report to the next committee. Currently, there's no strong overall pattern in areas attracting lower assurance levels. However, resources and the place directorates have the highest numbers of lower assurance levels at this point in time. The number of lower assurance levels to date is 44%, which is slightly higher than the outturn for 22-23 of 41%. Full detail of the audits completed and their assurance levels and opinions can be found at Appendix A, Table 2. So across the 12 final audit reports that have been issued in the previous 3 months, 86 recommendations have been made. These are broken down by service area in paragraph 8.6, and the year-to-date position is shown at Appendix A, Table 2. 2 fundamental recommendations have been made in these reports. These are to be covered on the private agenda. Details of the limited and unsatisfactory assurance levels are detailed within page 55 of your pack. I'd like to point out that one of these areas audited, Much Wenlock Leisure Centre, has received an unsatisfactory assurance opinion on multiple occasions. I'd like to ask if members would like to seek further assurances around any of the limited or unsatisfactory areas that are identified in the report, and I'll conclude there, Chair.
Thank you very much. Comments?
If I may, Chair.
Yes, you may, certainly, Jim.
I've got a couple of questions. One about the recruitment concluded by the end of March. We've got 6 weeks to go. Should it be offered by now? Are people on the way to us, or are we still? What stage are we of that recruitment if it's going to be completed by the end of March?
The adverts are currently live, due to be completed by the end of February, early March, and then we'll be interviewing within the next week or so after that.
And typically notice periods are a month or 3 months, or what's
for the higher levels, we're recruiting at all levels within the service, and typically at the higher levels, it could potentially be 2, maybe 3 months, a maximum, I would say, at the higher levels. So we're hoping to make the appointments as soon as we can, so that we can fill those posts as soon as possible.
So on some of those senior positions, they may not actually start. If we're successful by the end of March, they may not even start till summertime or later.
Correct.
And my second question, Chair, if I may, is around the planned audit, and there's still a lot of auditing to do. The report is up to the middle of January. That's sort of 10 weeks to do not quite 30% of the auditing. How's that going to be achieved? Do you want to?
Yeah, I think yeah. That would be.
Thank you.
Yeah. I'm still there is a slight skew in the plan in terms of when the cut-off is for the report to come through to audit committee. So through our planning and our management meetings, we're happy that we've got the resources to deliver the remaining audits by the year end. That said, there is always, so we've got draft reports out at the moment. We aim to have the work finished in draft at least by year end. There may be some lag where the reports aren't finalised, but Barry and I and our principal auditor are comfortable that we've got the resources to deliver the remaining work in the last quarter.
Thank you.
Do I understand that Mark Barrow is coming for the private session?
That's correct, yes.
Because I think that we need to have some firm assurance that action is going to take place in relation to the Much Wenlock Sports Centre, since we are told that it keeps on being unsatisfactory year by year. This year, to make a point, totally unsatisfactory to us. And I feel that we shall want some assurances from Mark Barrow that this situation will be rectified.
Yeah,
we're keeping on allowing poor performance to go on and on and on in a way which I'm sure would not be allowed in most private sector organisations. So if we can leave any further discussion on Much Wenlock Sports Centre till we have Mark Barrow with us, I think that will be helpful. Yes, Roger, sorry.
Thank you, Chairman. Apologies for being late, but I did need to be at one of my local primary schools because they have financial problems involving making a number of staff or reducing a number of staff. My apologies for that. On this report here, I note in the public part on page 54, the North West Relief Road, unsatisfactory and the recommendations for it. And I know it's in the private section, so there's limited what I can do, but there's absolutely no reference to that at all in table 3, unsatisfactory limited opinions issued for the period. It isn't even mentioned that it is going to be discussed in the exempt section, and I am conscious there is an item in the public section of the council meeting next week. On Thursday, and there's going to be some sort of comments made somewhere, and all that's here is there's just no comment except unsatisfactory, fundamental, significant, and it's going to be discussed there. I'm conscious that I and others may well be asked questions about what is happening, but there's nothing I can say because it is all in the exempt section. I'll say more when we get there, but there's just nothing. All it is just a tick box that is there. So I can't say any more than that. And I am concerned that if we are on the audit committee and answerable to the public and the council for the opinions in it, but we're saying nothing here at all except that the North West Relief Road had an audit. It was unsatisfactory, 2 fundamental, 8 significant, and 3 requires attention.
Well, that's what we are going to discuss, Roger. I don't understand the point.
The point is, Chairman, that Much Wenlock is mentioned, limited assurances, privileged user, out of county, but the North West Relief Road is not even mentioned there at all. To say that it is going to be considered, but it's just gone over and there's nothing there at all, Chairman. There needs to be at least one line to say what is happening elsewhere.
Yes, okay, Chairman. Yeah.
So just to explain, that the North West Relief Road audit will be considered in closed session, which enables the audit committee to have a full and frank conversation about that issue in closed session. where there are a number of elements which we are unable to discuss in public session, which enables the committee to have that conversation. In terms of this report, it's absolutely correct that it is reporting the numbers associated with that, because that's public information. It doesn't disclose the issues because they will be picked up within the closed session. But again, just to assure the members of Audit Committee, the agenda is very clear that in the closed session there are 2 reports around the North West Relief Road that will be discussed. So there is no, the fact that it doesn't say that again within this report, I think is irrelevant from that point of view.
Well, that's my view.
If I can, Chairman, there is nothing stopping 2 different reports, one in the public and one in the private section. It does happen in other places and on other agendas. It can be a public report of what can be said in public, maybe plain or whatever, things like that, and there can be a totally separate one where it can be a closed session, private session, but it's just that there's no mention at all, just the box there, and that's why I am unhappy with what is said there, that nothing appears in the public session at all to say why it is unsatisfactory, even if it just says that it was inspected, etc., etc.
Well, that applies to a number of other matters as well. Anyway, we note your view, Roger, but I don't think we can take that any further. Any other items? Yeah, in consideration. Right. So, shall we agree to accept receive the internal audit performance so far this financial year? We shall obviously have a further report after the end of the financial, at our first meeting after the end of the financial year.
Yeah, can we just go back one note?
Yes, sure, Nigel.
Apart from Montreal, which we said we'll discuss later, is there anything else that the audit team thinks that we ought to be bringing back to the committee? Because it hasn't got its own separate sort of header that suggests it. Or I noticed things like leisure contracts and that sort of thing. Is there anything? I don't want to miss it, because last time we ended the meeting and missed the opportunity to perhaps bring some things back.
I can pick that one up, Chair, if I may. The ones listed in that table, the leisure services contracts, have come to a previous meeting. So in this one, we highlight the ones that have just been done in this. That said, you can go back to ones previously if you want to, if there's an emerging issue that you think actually I'd like a bit more assurance on. There's always a bit of a timing issue with some of them, because there is, as part of the report, there are agreed management actions that they may deliver on. So to give you some assurance, if it's an unsatisfactory audit or there's a fundamental recommendation, we would always complete a follow-up audit, which would be reported back to you. So if there are any areas where you're looking at that list and you've got other concerns, you can always ask for a manager assurance to come back and report where they are with it, or we can ask them, I can take it away and ask them to provide an update if there were any that you were interested in that were maybe missed in the previous meeting.
Thank you.
Sorry. I'm grateful for your comment, Nigel and Katie, because it's reminded me of something that I wanted to ask. If you will go to page 57 of your papers, item 50, page 15 of this report, page 57, the very last sentence: fundamental recommendations not implemented after the agreed date, plus one revision to that date where required, will be reported to Audit Committee for consideration. Have we any other than Market Drayton and the North West Relief Road possibly fall into that category? Are there any other audits which you are finding are not being implemented, where the recommendations are not being implemented?
At the moment, there are some that we still class as open where the management implementation date hasn't passed, but there are none at the moment that I would bring back to the committee that I'm unhappy they haven't actioned. That's in the final quarter of the year. There are some unsatisfactory audits that we will be following up. So if there were any within that where the fundamental recommendation hadn't been implemented in the follow-up audit, we would bring that back for your attention and highlight it if you want to have a management assurance around why that
Well,
is.
it's my view that if our recommendations are not being implemented in reasonable time, particularly since we allow one revision of the date, it's our policy to allow one revision of the date, then we should consider them as a committee and make it quite clear that we simply do not accept that. That there ought to be some officer consideration of their conduct in not implementing the recommendations. So we'll leave that.
Larry and I'll make sure if there's any in the next quarter of work that we review that haven't been implemented, we'll separately identify.
Yeah, and thereafter as well.
Yeah.
As a matter of policy.
Yeah.
Okay.
Chairman, you were asking about whether we approve item 8. I'm going to be voting against it. Nothing against the officers, but I am concerned due to the public interest there is in a particular subject that subject is not mentioned in it, and therefore I'm voting against accepting this report. I know I may be the only vote, but I think I need to register that.
Brian, could I respond?
Yeah, sure.
Just in reference to the process for why that isn't in the report, that's consistent with other reports that have gone on the private agenda. So at the previous meeting, the November meeting, we had the Montague Evans contract management, exactly the same format. We can't list it in the public session. The bit you're referring to is where we list the control objectives not achieved. There aren't any that we can report publicly for the reasons of the exemption. So we're following the Constitution in terms of what we can report in the public domain. And I believe we did it on the same with the highways contract management. Where it relates to commercial contracts, there are valid reasons why it can't be reported in the public session.
If I can, Chairman, I understand that, but for this particular subject, there is very high public interest in this subject. But it's not in there. So
we understand that. You're entitled to vote against not to receive the report, and it will be recorded in the minutes that you have not approved the report. Now, will those who wish to receive the report so far for this financial year please show? And those against? Right. So that will be minuted. Okay, so that report is now agreed. We now move on to item 9, report of the audit review of risk management. Katie, you're going to take us through this.
Thank you, Chair. This report summarises the findings of the recent internal audit of the risk management process and been given reasonable assurance. So as part of the public sector internal audit standards, internal audit are required to evaluate the effectiveness of the risk management process. And this is one of our annual audits, what we call our must-do items. To support the SIAS, it's part of the audit committee's terms of reference for them to review annually the adequacy of the council's risk management arrangements, which is why this particular audit is reported to you in a separate report of its own. So the last review was undertaken in January 2022 when it was assessed as good. And the most recent review has been completed and it's reduced to reasonable. Within the report, under section 6.8, it sets out the control objectives that were reviewed and the ones that were achieved. The main reasons for this reducing from good to reasonable was the quality of the operational risk, the risk registers. So there's a two-stage process for the risk management. The risk management team oversee the whole process and coordinate the risk management approach. They're in charge of the strategy, ensuring the strategic risk review and supporting the executive directors in doing that. So there's an element of the work that is incumbent upon every manager within the organisation to be responsible for their own risk areas. And it's those bits in particular where there were some parts that hadn't been updated. So if you look at under paragraph 6.8, the first point there, the control objective there was not achieved although there's a policy in place and operational risks are recorded, a significant recommendation there was made that 27% of the project risks were not updated within the 2023 year. Again, under section 2, the control objective wasn't achieved. The review of the operational risk registers found that 21% of those operational risks hadn't been updated in 2023, and there were some incomplete fields within those registers. Happy to take any questions you have in relation to the report.
How will these objectives be achieved then?
As part of the recommendations, the risk manager has put in place a new process. So she already had an existing process where it was reported to executive directors and assistant directors. She's now producing a separate report to those areas where they haven't been updating it to raise the profile. This was something that was in place in the past, but due to resources had been reduced because the situation had improved. And obviously with the latest operational risk review, it's found that it's lapsed again. So to reintroduce those controls to try and strengthen the approach across the organisation.
Okay. Slightly concerning the report in general, because last year the report was it was good, and it's now moved to reasonable, which is one step below good. So the direction of travel was not that which we would all wish, I guess. Yes, Simon.
Yeah, thank you, Chair. When we've seen an increased number of unsatisfactories, and we're seeing this report falling from good to reasonable, on our watch as the audit committee, the direction of travel is not good. And I know you've had recruitment issues. What I was going to ask about this particularly is, are the managers aware, like through their, I think we call it a personal development plan or annual appraisal structure, are they aware that they have to keep these registers up to date? And if not, if they don't do it, there must be some consequence, I would hope.
Yes, there is a process, and it's well communicated. In addition, this year the risk management team have undertaken in-person training sessions as well. So every manager who is responsible for a risk register was invited to those sessions and given support to review their risk registers and ensure they were updated.
Right.
That said, the risk management team is a very small team, so there's only so much they can do. There's 3 full-time equivalents within the year. So they can't make sure it's on everybody's individual personal development plan. It's managed through the executive directors and the assistant directors. So if there's particular teams or areas where they're not being updated, it's passed to their service manager or assistant director to manage in that way. Our audit wouldn't look at whether it was on people's individual personal development plans, but it should be something that their manager would be considering if they were.
So is it within the personal development plan at some level?
Yes, it would. It should be.
Structures. And when you say people have been invited, have they actually turned up?
I believe the take-up was quite good, and just yesterday they sent invites out again for another round of in-person training before the end of the financial year, I think.
Chair, is it worth at the next meeting just getting a very brief update on direction of travel on this? I mean, clearly we're concerned.
At this meeting, the risk manager, but the strategic risk review hadn't been through informal cabinet at that point. So Jane is scheduled to come in with a strategic risk update at the June meeting.
Thank you.
So we could put that on the minutes to ask her to give an update on the risk management.
Yeah, I think that we wish that. Roger?
Thank you, Chairman. I'm not quite sure where the role of the audit committee is in this. So Jane hasn't taken it through the executive team, so it's not brought here for us now. But if the audit committee, and some of this is not achieved, and some of it is achieved, but there's a reference about 21% and the council being at risk. Where does the audit committee actually sit in this? we've got yourselves, and I congratulate you on the work that you're doing, even with the reduced numbers of staff that you have available. But where is the position of the audit committee? Does it sit subservient to the executive team, or does it sit separate and therefore should receive it, whether it's gone through the executive team or not?
The risk management process of the strategic risk review, which is the report that's in the terms of reference for Jane to bring to the committee twice a year, it's part of the risk management policy that they have a strategic risk review with executive directors where they review all the strategic risks, and some may be amended or the scoring's adjusted. That then goes through their process to agree them. The audit committee's role is not to set the risks. It can comment on them and feedback, but that's the agreed process in the policy that it goes through the executive management team, and the report would be agreed there before it came here. So it's brought to you for your wider awareness around the risks facing the council and to help inform, are you receiving the right information? So if you've got, for example, if you've had a lot of strategic risks where you couldn't tie that back to any audits being done, that would be a question you'd want to ask. Are you auditing the right things? Are you giving us the right information to get a complete picture of the control environment?
Thank you, Katie. It's always been my assumption that it was within our terms of reference to overview risk within the council. But James may have a little more to add to that.
Yeah, certainly, Chair. The risk process is considered by the internal audit team, and audit committee can take a view in terms of the risk process, but also the consideration of the risks themselves is also within the remit of this committee. So just to assure council in relation to the approach around strategic risks, from a practical point of view, one of the first questions around any review undertaken by the audit committee around the strategic risks is this known to the authority? Are these risks accepted by the authority? Are officers accountable for these risks? And so what we do is we ensure that not only the executive team but also informal cabinet have taken account of, accepted, and are accountable for all of the risks in there in that process, and then we bring it through to audit committee for that consideration. So it's really just a practical point rather than anything else.
Thank you, James. Right, shall we?
If I can, and sorry to push it, Chairman, but mention there was about the strategic risk. In this report, there is the project risk should be managed through project boards. The risk team supports it. This is an area of increased risk. So the project board does it. Does that go then to the strategic risk where we see it, or is there a project risk there? Do we as an audit committee ever see that?
So if I may, Chair, the audit committee is charged with reviewing the strategic risks of the organisation. The operational risks and the project risks are all part of the risk management process, but there are literally thousands of operational risks that are being managed on this basis. We would never bring operational risks to this forum because it would be unmanageable and would be unhelpful. As part of that process, one is reviewed by the internal audit team every year to see whether that system is working. The outcome of those operational risks is probably more of a scrutiny issue than an audit issue anyway. But in terms of those operational risks, the process by which those are managed is audited independently, and that is what you're seeing here in relation to that. In addition, there is a process within that which says, are there any themes identified within the operational risks or project risks which therefore need to be considered as a strategic risk? And then that process in itself is considered, and the outcomes of that, should there be a strategic risk resulting from that, will be reported through to audit committee and considered.
Okay, shall we approve the report as presented to us? Agreed? Right, we've now got one item from Grant Thornton, the external audit findings. And after that, we will obviously know the date and time of the next meeting, and I will take a 5-minute break. So there will be a break up.
There's item 10.
Item 10, Brian.
Yeah.
Which is the.
Yes.
Yes.
If I can, Chairman, I noticed that it was on pink paper, but it's on the open part
Yeah,
of the agenda. It's on the open, I don't know.
This confused me, Ross. Well, those were the receipt
Oh,
paper.
okay, I understand.
The print readings, the wrong bits on.
It had been pointed out to me earlier. Yes, I'm sorry about that. We'll take item 10 and hopefully see how we go on before we have our break. Right, internal audit annual plan. This is Barry going to introduce it.
Thank you, Chair. This short paper updates members on the proposed approach to formalising the 2024-25 internal audit plan. So in the normal way, what we would have, the normal approach would be to present the plan to Audit Committee in advance of the financial year. But as I've alluded to in the internal audit performance report, the ongoing recruitment process that we're going through at the moment, the plan won't be fully developed until the resources for 24-25 have been confirmed at the end of that process. So as part of the internal audit plan process, the audit risk assessment for 24-25 has been reviewed with the chief exec directors, including the section 151 officer and assistant directors, to ensure that it remains robust and matches the needs profile of the organisation. The detailed plan will be developed from this risk assessment once the resources have been confirmed, and then we'll bring that back to the committee in June. So whilst the formal plan hasn't been brought to the committee for approval in advance of the commencement of the next financial year, work will be completed between April and June in terms of the completion of the remaining work for 23-24, outstanding audits from the call-off list from 23-24, and follow-up audits of those lower level of assurance audit areas that have been undertaken during the year and in the previous year. The slight delay in the development of the audit plan for 24-25 will also allow consideration of any additional business risk areas highlighted as part of the budget setting process, or any movement in strategic or key operational risks that need to be taken into consideration following that. So this is just an update in terms of the plan for bringing the 24-25 plan back to committee.
Yes, Roger.
I'm not sure how to phrase this, Chairman, but I understand and accept everything that you've said and agree with it. And I noticed that you're bringing back the audit plan for 24-25 to a future one. Question I'm asking is it appropriate? Should we be looking at it? And I'm not sure the role of PwC in this council, because it is taking an more important role to advise the council on the way it should be going. So whether it's part of this process or this committee or not, I'm not sure, but I'm just voicing, when you bring the audit plan back, if needed, can it be part of the programme? Because I am concerned about where we are with it and how that is going. Whether this is part of the remit for this or not, okay, I don't know.
So, I got from that chat. So as part of the risk assessment process and the determination of the next year's internal audit planning process, we take account of those strategic risks. We're having the conversations with executive directors, the chief exec, and that takes into account all the transformation work that's been undertaken. That includes the Office of the Chief Exec and the transformation programme there, but it also includes any third-party engagement that we may have. Obviously, the key one there is PwC, as you say. So those elements will be considered as part of our planning process and ensure council that.
Thank you. Okay, shall we note the report? Right, well, we will now go to item 11, and after item 11, then we will take a break. So, is it Mary or you, Grant, who's going to present?
I was going to introduce Mary to present. In essence, what you're having here, we did bring a version of the audit findings report for 22-23 to the previous audit committee, and we've been working to finalise our work on the 22-23 audit. Therefore, this updated audit findings report, you've seen the detail of this before, but Mary, I think, is going to run through the changes from the version you've seen, and then we'll update you on where our proposals to sign our opinion on the accounts. So I would hand over to Mary.
Thanks, Grant. Thank you, Chair. Thanks, Grant. I was just going to keep it quite brief. Hopefully you will see that there are quite a few paragraphs that are highlighted in yellow. That's really just to draw your attention to the changes and hopefully make navigation easier to what you saw previously in November. I was just going to highlight two changes. There are two, following the completion of our work, there are two unadjusted misstatements that we've now reported, and you can see these on page 3 of our report in the headline page. One relates to the pension asset. There is an unadjusted misstatement there of just under £1 million. And on other land and buildings, there was an error in some of the evidence that came back where gross internal areas hadn't been updated in the valuation reports. And that does work to a total of 3.6 million understatement of your asset value balances. Neither of these amendments impact on the general fund balance. There wasn't anything else I was going to raise, but hopefully you can see the changes to the prior report, but more than happy to take any questions on the remainder of the report.
Any questions? I think we...
Yeah, Brian, Chair?
Yes or no?
Yeah,
Ivan.
Thanks. I thought it was very clear and I really appreciate the highlighting. It made it an easy read. Do you have a expected date for the audit sign off, please?
Brian's on mute.
I'm on mute, so I can't speak.
Yay!
No, yes. In terms of now that we've presented this audit findings report to yourself, we need to complete some final file review checks that will happen probably tomorrow, and I anticipate issuing the opinion for 22-23 on Monday is the proposal.
Thank you very much.
And also just to make that clear, at the same time I'll also be issuing the opinion on the pension fund account at the same time, and also the consistency report that will go alongside the 22-23 pension fund annual report.
Well, thank you for that assurance, Grant. How are we doing with the programme for the coming year? You remember there was some delay in us receiving your views on the accounts.
In terms of, I suppose in terms of, Chair, just picking up on your comments you made, I think just before the meeting started, is I will be continuing as your engagement lead for the pension fund audit. I do have a new role within the firm in terms of pensions, so I'll be stepping away from the council audit. We introduced my colleague Avatar Sohal to James in a meeting this week, I think it was, or last week, and planning is, and Mary is continuing as the manager for the council, and is also now going to pick up the management of the pension fund. And part of that is to try and make the audit more efficient and effective across the team. So you'd have a consistent team on both the council and the pension fund audit to try and to drive that forward. Our overall, so we've started that planning process. There is elements of planning have begun. So we will propose to bring an audit plan, won't be in my name for the council, to the next audit committee. And overall, we're in discussions. James has expressed his views. He'd like to get us back onto a cycle where we can complete the audit by the end of September. I know Avatar is looking at that as a firm in terms of, I suppose, entering into the new contract. We are making a commitment to get all of our audits done by the end of December, but there will be tranches within that. So it will be significantly ahead of prior years in terms of assuming, that the audit goes smoothly and there aren't any issues. And then I think the year after that, we'll be led to look at to bring things forward and get it back into more of a, I suppose, what you're more used to in terms of chairing audit committee number of years is more of the normal cycle of interim reviews early in the next calendar year and earlier sign off. So we're having those conversations with James in terms of how quickly we can get the audit done. And I think he has made it clear he wants us to move towards the end of September. I can't directly speak for Avatar. I think that's going to be ambitious for this year, but I think we will be looking towards end of October, November. But Avatar and Mary haven't sat down and done the detailed planning yet, but we'll come back to you as part of the audit planning process in relation to that, in terms of that work. But as a firm, our commitment is to finish everything by the end of December across our whole client base. So that's our overall plan and strategy for audits.
Yes, well, James is ensuring that his team meet the laid down dates. So we were hoping that your team will not be too far behind. Shall we put it that way?
No, that's fair comment, Joe. And actually, one detail things in the conversation we had with James is actually getting those dates agreed. Knowing when your teams are available, when our teams are available, and then we can come back to you with a working project plan that works on both sides as well. So those dates will be critical, and that's part of the project planning that will happen as it's going on now, and it will go into the next couple of months, and then we'll come back to you.
Thank you very much. Now, Grant Thornton's audit findings are before us. Shall we receive them with thanks? Agreed. Right. So that now brings us, I think, to item 12, date and time of next meeting to note. And then we'll deal with item 13 now, so that the public are not kept in any doubt. So I move that to resolve that in accordance with the provision of Schedule 12A of the Local Government Act 1972, Section B of the Local Authorities Meetings and Access to Information Act, the public and press be excluded during the consideration of the following items. Is that agreed? Right. Will those who agree please show? Those against? Right. That will be noted in the minutes.
Can I just add that I'm against because I believe that items 16 and 17 should be in parliamentary.
Well, I thought that would
be
the reason, but you're perfectly entitled to that point of view, and it will be recorded. Right, so we now go off air, and we will have a break of approximately 7 or 8 minutes. Come back at 25 past.